Hello, this is Tom from Market Life, and welcome back to the 100 Trade Review series. Today we're going to be getting through trade 50, so let's get started. This is AVRO on June 1st, and our entry is 2113 here, and stop is down at around 1814. And a few days later, we take profits on June 5th at 2313 for about a 0.66R win. Okay, let's move on. Okay, next up we have ETM on June 4th, and our entry is 199 here, and stop is down at 166. And we take our first sale the very next day at 223. And get stopped out of the rest on the 9th at 218. So that's another roughly 0.66R winner. This is Plug on June 4th. And our entry is 458. Stop is down around 391. And after this strong close at the highs, I decided to just take it as a day trade and lock in the 0.6R profit, which did end up leaving what would have turned into a, at least a 1R winner on the table. But there's a price for everything. So taking that risk off and locking in the profit versus risking, this could have easily filled in most of this bar the next day before moving higher. And if we look at some of the action on how this trades, like this definitely would have stopped out any position that still would have been holding after this move up. You might also be saying, but Tom, the stock, eventually it goes up from, $3-4 all the way to $33. Doesn't that feel weird? And a little bit, but you have to remember that that's not this style of trading, and if you are doing this style of swing trading, you have to live with the fact that sometimes you'll be in a stock that winds up going up hundreds or maybe even more of percent, and the way to capitalize on that is to try and find other places to go long, or start trading a different system, maybe set aside some capital to try and find trades like that. I've done, and I'll probably do another video going over some of this. I've done the back testing on all of my trades for the year, and what would have happened if I had used this style of trailing stop or a pure in or out at 1R or negative 1R, and what that does to the results. And it honestly doesn't change the results that much. All of the styles are within a few R of each other, which is interesting. And so the system that would have used a trailing stop would have gotten stopped out on this bar, so you still would have missed it. And any system that has you holding this stock for this entire move just would require such a large amount of capital, so that you can be in like a lot more positions at the same time, that you're going to catch bigger winners, but they're going to be with smaller size, so it still winds up working out to be around the same results. So all I got to say about Plug. Let's see what's next. This is Score, SCOR, on June 8th. Our entry is 4 even, and stop is 320. So looks like the day of entry we attempted to break out a little bit, pulled back to around our entry, and now let's see what happens. Not much the following day, inside bar, and on our third day get stopped out just near the bottom of the range from our entry, and that saved us some money. That is a 0.4R loss, and not much more to say about it. This is EXK on June 11th, Endeavor Silver, so a metals company, mining company. Our entry is just near the top of this wick here at 215, so Looked like we were just trying to push out of that consolidation, and it totally failed. And we got out at the end of the day at 191 for a 0.8R loss. And let me tell you, I have been beaten up trying to trade some of these mining stocks before. So I think we have a good trade in it later on, but this was, just a one day loss. So, and we would have penetrated through -1R and then bounced up, of course. But not much more to say about that. Okay, that rounds out the first 50 trades of this series. I hope everyone who's still watching is enjoying this and finds it maybe helpful, useful in some way, interesting, and entertaining even. So be sure to subscribe to the channel, sign up at marketlife.com, like the video, leave a comment. We'll see you next time.